Hi all. Now we are discussing an area, an overview of capital investment decisions. With our different capital investment decisions or project evaluation techniques. These areas are briefly discussed now. I think you will have already gone through these areas. So we are going through these areas quickly. Capital investment decisions are also known as capital budgeting decisions, project evaluation techniques, or investment decisions. We will refer all these names for capital investment decisions. Capital budgeting decision, project evaluation technique, investment decision, or long-term asset mix decision, etc. It is the technique of making long-term planning decisions for investment and their financing. This is the meaning. Then there are three approaches to capital investment decisions. First one is disaster approach. It is a careless approach. The firm will make investment decision only in needs. Only if there is a need for investment, the firm will think about that. That approach is called disaster approach to capital investment decision. The second approach is passive approach. The firm is not active, they are passive, they are not at all interested in making such a decision. And the third one is dynamic approach. The firm will be always deciding, always thinking about the capital investment decisions. These are the three approaches: disaster approach, passive approach, and dynamic approach. Then there are different types of capital budgeting decisions. The important type of decisions are, first one, accept or reject decision. This decision is taken if there is one project and we have to decide whether to accept the project or reject the project. This is accept or reject decision. Second case is mutually exclusive project decisions. We have 2 or 3 project decisions and we have limited fund. For example, if we have 2 projects, project A, project B, we have to decide. We can select only one project, either project A, project B. So this is the case of mutually exclusive project decision. We have only one project to select, but there are 2 alternatives. We have to decide whether A to be accepted or B to be accepted. And third one is capital rationing decision. Capital rationing involves if we have more acceptable investment proposals than a company can finance. For example, a company is having 5 lakh rupees and it has 5 alternatives. From the 5 alternatives, the company can select either 2 or 3 alternatives. Here, in this case, there are more projects and less fund. Okay, these are the types of capital budgeting decisions: accept or reject decision in case if there is only one project. Mutually exclusive project decision, if there are 2 projects, only one can accept. And capital rationing decision, there are a lot of alternatives but less fund. Okay. Then methods of capital budgeting. There are different techniques of capital budgeting. I am simply going through the techniques. First one is traditional techniques. Traditional techniques are also called non-discounting techniques. It includes PB, payback method, ARR, accounting rate of return, average rate of return, then discounted cash flow techniques. It includes NPV, net present value techniques. Discounted cash flow techniques are the present value techniques. We will convert the amount into present value by using discounting techniques. It considers the time value. Then it includes NPV, net present value technique. Then PI, profitability index, or BCR, benefit cost ratio technique. Then IRR, internal rate of return technique. Then TV, terminal value technique. Then another third category, statistical techniques. There are a lot of risk adjusted techniques. It includes probability, certainty equivalent coefficient, CEC, certainty equivalent coefficient, CV, coefficient of variation, sensitivity analysis, risk adjusted discounting rate. Then there are other techniques also, game analysis, etc. Okay, these are called statistical techniques. And fourth one is urgency method. In case of urgency method, decisions are randomly taken based on the urgency of fund. No specific format is there. Urgency is the criteria for evaluating, for selecting a project. Okay, these are the methods of capital budgeting. We have to go through the methods in detail. So I have just given you an outline of what is capital budgeting, what are the steps, what are the methods, what are the types of decisions, etc. Okay, thank you.